to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ. How are you doing?
Love this split screen thing we're doing, Sip. Look at that. I could point right at you.
I think you're this way. You're this way then.
Yeah, that's very cool. Hey, good morning.
Good morning. Episode 69. Today is February 17th. I feel like the chatter this week is back on inflation. Inflation.
Absolutely.
What are you seeing on your end of things?
I mean, we better just delve into the economic reports. Let me switch screens here and we'll get right into it. So we had economic reports on Tuesday, consumer price index, form of inflation, right? That's retail inflation. We then had retail sales on Wednesday, and we had industrial production on Wednesday. And then on Thursday, we had our producers price index. So this is wholesale inflation. So let's take a look at all three of those really quick. We'll start with consumer price index. So they revised up the last measurement by about 0.1%. And then they had these targets for this measurement, and it was hotter than expected. That means that prices are still going up more than they wanted to. They actually want that to tamp down. They would have wished that these numbers came in lower than expected. They came in higher. So that was our retail inflation. Then you look at retail sales, and they're hoping that people, kind of calm down on their purchases. Yeah, that didn't happen. The revised numbers were revised down from what was the last number. Last time they said, hey, retail sales dropped 1.1%. This time they came around and said retail sales, when you factor out car sales, actually went down only 0.9%. And this time, people started buying again in droves. They were buying again. I think, people kind of have been hoarding their money. We saw that in kind of a lackadaisical holiday sales. People from about October through January were like holding. Now, all of a sudden, you've got this thing where, remember the supply chain we talked about like 6, 7, 8 months ago, how that was giving people, an agita in their stomach because they couldn't buy things, the supply chain got fixed, right? For the most part, the supply chain's all caught up. I mean, you're in California. Is there still a whole bunch of ships backed up at the ports? I don't think so.
No, that problem's been solved temporarily.
And then all of a sudden now these retailers have all this stuff that they could get a hold of that have been held up for months. So they over purchased. And so now stuff is on the shelves and the retailers need to get rid of it. And these people have been hoarding money over the last 4 months. And so that their sales, it's like the perfect bunch of events happening at once. It's kind of this balancing. It's like almost like when you see a stone dropped in the middle of a lake and you see ripples and then troughs, and that's what we're seeing here. We keep seeing these corrections in both directions, and at some point it's going to smooth out to the lake is flat again. But now we're going the other way, and you can see retail sales was hot. And then when you come to industrial production, when you take a look at manufacturing outputs, manufacturing was up more than they had expected. Cap utilization rate, that's how well they're using people, they're using labor. And that actually, interestingly enough, went down. But overall, this is higher. So it looks like we're making things here back in the States like we hadn't made things for many years. It looks like we're starting to revive a manufacturing sector that had been offshored for quite a few years. And then we come in on Thursday with the producer, the wholesale inflation, again, hotter than expected. So pretty much on every investor's mind is, oh my gosh, we thought inflation and prices were going to start moderating, and instead they're hotter than ever. And then you look over here in the housing sector, we also got housing starts and permits, and they're just not building new houses for people. So, the number was expected at 1.365 million. It came in at only 1.309. This other number for permits, that's how many, builders are actually pulling permits so that they can build, start a house in the future. That number is low. So, this is just a kind of combination of things that is going to keep prices higher. And that's going to pretty much give the Fed a blank check to take more extreme measures, which Wall Street doesn't like. So if we take a look at the S&P 500, we take a look at the VIX, you can see that all of a sudden in just the last 4 days, we changed our posture completely. Instead of giving ourselves a continued uptrend signal, we started to get a downtrend. Pretty much here at Trading Trainer, we called the downtrend starting on February 9th. We're going to see what happens right now, but it looks like we are going to get an expansion move by the end of today. That's going to kind of solidify this downtrend that we're in a little bit stronger. So it looks like we're changing. But you know what? I'm looking over the last 6 months, and we're having these little reactions as, like I mentioned, that the tide goes one direction and then the tide goes the next direction. And you'll notice that each time the tide goes in the next direction, it gets kind of calmer, like those ripples in the lake that I'm telling you about. And so the scoop in my mind is, so long as you're sticking with me and you're doing that premium selling and you're taking advantage of the fact that we're just sideways channeling, I mean, that's the scoop. And instead of getting all wrapped around the axle trying to trade these directions and know when the market changes opinions, we're just going to keep selling premium. And that's how we're going to make an income off of this, like this market.
Yeah, and that's one of the reasons that we started the show 68 episodes ago, was to help educate young investors, old investors, new investors on this interesting way of using options to create an income stream. It looks like you're pulling up the VIX here, which is another tool used by a lot of options traders. And I would guess that things are calming down, even though the market's falling.
Well, interestingly enough, we're at, kind of that mean that we draw. This dotted line is the volatility or implied volatility mean on the VIX. And so we're down there at the mean. We've spent a lot of time recently above. That means that fear and kind of confusion and uncertainty in the markets, it has been higher than usual. And it's been that way for an extended amount of time. I'm looking at a 6-month chart. We can go back to like a 2-year chart, and you can see that we've been spending a lot of time confused and uncertain about the markets. If I go back even further, Sip, let's go back 5 years, right? In 5 years, you'll see that, 2 or 3 years ago, before the whole pandemic thing, we were actually calmer than we had been. And if you look at it over time, I'm going to take a look at a 10-year chart. This is going to show monthly bars instead of daily bars. You can see over the last 10 years, we were calmer than we have been overall. And then the pandemic came and we've been a little bit excited. But at coming back to the present, we're getting calm again. But you know what? 2023, I think, is going to have a lot of surprises because the Fed isn't being, like we said earlier, just a few minutes ago, the Fed isn't being allowed to be hands off. If these reports keep coming in saying that things are hotter than expected and prices are hotter than expected, the Fed is going to be forced to keep meddling. And every time they meddle, it's like they're changing the goalposts of how you play the game. They're changing the rules. And so folks are going to have to modify their investing strategies. And that just, whenever people have to change from what they're doing, it creates confusion and uncertainty. So what I'm actually doing, and this is kind of a hint for some of our viewers, we talked about it like 30 shows ago. This is a perfect time to be hedging your portfolio against uncertainties overall. Like if the Fed makes a surprise move sometime in 2023, that would cause the confusion and the uncertainty to go back up. We could use our option strategies actually trading against the VIX to hedge our overall portfolio. So I urge people to kind of think about that. Go back to some of our shows or even be part of some of our programs so that we can talk about that and get you prepared so that if something happens, you're going to get paid off on it.
That's right. It's definitely the best way to be proactive with the uncertainty, and with all the data that we've got coming out this week, it's kind of all over the place. The pressures being put on to the Fed. And so if you're watching, listening for the first time and you want to take a deeper dive into Trading Trainer and AJ and his strategies, we've got a wonderful workshop, a free workshop that's broadcasting every day. So if you have some time later today, or maybe tonight, or tomorrow, this weekend, we just threw a link into the chat. Head on over there and sign up. You'll get some more information on all the strategies and what AJ's been doing for 20
You know
years
what
now.
day it is, don't you, Sip? You know what day it is.
Options expiration day.
Options expiration day. It's the third Friday of the month. So monthly options expire, everybody, on the third Friday of the month. You probably already knew that. That means that all of us that have been selling options, we get to lock in our gains today. This is payday for us. And what that also means for those people who want to check out that workshop, I'll be spending the weekend updating the examples in that workshop. So if you give me a day or two, I'll be able to, you'll log in and you'll watch that workshop. Or if you've already watched that workshop and you'd like to watch it again and see some newer examples, you should be able to get some of those probably by about Sunday or Monday.
Yeah, and in addition to that, I assume that this weekend you're going to be putting in some work for the upcoming webinar that you have, the co-branded webinar with Metastock. We're going to go ahead and throw the link to that into the chat. It's the Traders Conference, and specifically Tuesday, February 21st at 4 p.m. EST. AJ's going to be speaking, but it looks like it's a very interesting event going on through the whole week. So if that's something that you're interested in, we're going to go ahead and throw AJ's special link in the chat. So if you're going to sign up, please use AJ's link. AJ, anything you're going to be talking about that's a little bit different, or we're just going to be tailoring it to the slew? I mean, it looks like there's going to be hundreds of people attending, 40 professionals, 5 days. This looks like quite the event.
Yeah, Metastock is a software company. I love them because they're not affiliated with any broker. So if you really want to get into some technical analysis and charting and stuff, Metastock is a very good software. I've had a relationship with them for, almost 25 years. I started using Metastock in the late 90s. And I've been keeping my software version with them up to date. So they have this event about once a year. And I've been invited this year to be part of that event, to be one of the presenters. So like Sip said, I'm on Tuesday at 4:00. And so you guys should register. And it's a whole week of presenters, starting, Monday and going all the way through Friday. And so if you want to, be exposed to other folks and their trading styles, you might want to just register. I don't think in fact, I know there's no cost to listen in. So you just register and check that out. But yeah, my specific presentation, of course, it's options premium selling oriented, but I'll be showing how I use some of the Metastock software in order to find my signals quite easily. So if you're interested in kind of automation and how to use software in order to do some of this work that otherwise would be tedious and done by hand, even some of the stuff that my users in my own program, since I don't really use Metastock for my users, they might see something new as well. So you might want to register and at least come to my presentation. And even if you can't make all of the presentations, I mean, literally it's 9 to 5 every day that you're having presenters. If you just put your registration in, Metastock will make sure, I ask them, it'll make sure that you get replays of all of them so you can watch them at your leisure in the next month or two.
Awesome. And so the link is in the chat. We just went ahead and threw that in there. So exciting stuff. I'm wondering, AJ, if we want to touch on what was I looking at here on the bond selling? Because
No.
I know we talk about that every week. And did that shift at all this week because of the economic news?
Well, the Fed, they took some. It looks like they took a break from selling bonds for a week. I didn't check in last Thursday. Every Thursday they say, they give an announcement and then they update this graph usually over the weekend. So they haven't updated the graph with what happened last Thursday, and I didn't read the report, so I don't know if they started on. But one thing that is very interesting is bond rates. Not bond rates for the 10-year Treasury bond and bond rates that mortgages are based on started to head back up. Remember, there was this weird thing going on where the Fed started selling, and when the Fed starts selling bonds, it makes the bond rate go up. And when the bond rate went up, people started to take their money out of equities. They were like, why would I invest in this type of asset that's somewhat risky? And they were especially taking money out of companies that they were investing in that weren't showing a profit. They were like, why would I put my money into this stock where the company isn't even, making a profit? In fact, they seem to be losing more with my invested dollars when I could put my money into a bond where I'm guaranteed a 6% per year return. Why would I put my money in there? So when the Fed started selling bonds and the interest rates on bonds started paying back because of this selling, because of them dumping these bonds on the market, the yield started to go up quite drastically, and money started to flow from equities into those bonds because the bonds were paying a lot, and it just made sense for long-term investors to take their money out of risky assets and put them into the bonds. And so that was actually causing the bonds to go back down because people were buying them as fast as the Fed was selling them. Well, it looks like, and I don't know what optimism, what drove people, except for maybe this sentiment that the Fed was going to slow down on their interest rate hikes. People started to take money back out of the bonds and start going to the risky assets again. I started seeing things like, we've been watching some of these companies that we pretty much said Wall Street thinks they're dead, like Peloton. If I pull up the stock for Peloton, I mean, all of a sudden Peloton got some investors in it. You can they went back from a low of $8 per share all the way up to about $16, $17 per share. So they doubled the value of their company because people were like, maybe I should take some money out of bonds and put it back into Peloton. And so that caused the bonds to go down again and the yields to go back up, which means mortgages are going back up. It's just this overall dynamic of things that's going on. I think it would behoove the Fed to keep on that bond selling. Number one, they have to reload that tool because who knows when they're going to need to use it again. And if it's not reloaded, they'll be firing blanks. So that's number one. They need to clear their balance sheet just because they shouldn't be taking on debt and printing money for the fun of it. They need to be very careful using that tool in the first place. But in the second place, I think that they should keep the bond rates at a certain place because in my opinion, you really don't want investors rewarding companies that can't figure out how to run a business. That defeats the purpose of the game. So that's kind of my 2 cents. If you're out there, Jerome Powell, hire me as a advisor because I'll tell you exactly what's on my mind.
Yeah, well, last week we did post a video of what would AJ do if he was chairman of the reserve. And so if you want to get a 5-minute pitch on what AJ would do, head on over to the YouTube, check that out. All right, moving on. In our next segment, we're going to get AJ's pick of the week. We're going to go through our speed round. If anybody's watching, listening for the first time, and you have a ticker or something on your mind that you want to ask AJ, we are live. Throw it in the chat. If we've got time, AJ will pull it up. We'll go through it. Otherwise, we're going to take a quick break, and then we'll be back and we'll dig into AJ's pick of the week. Stick around, folks.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. I was looking at the notes today, and your pick of the week is actually one of the questions that was brought up on last week's show, and that is
Dan.
Host Hotels, right? Host
Yep.
Hotel or Hotel Group, ticker symbol HST.
Mm-hmm.
What's the story?
Mm-hmm. Okay, so Dan from Charleston created, he suggested us to look at this candidate last week during the round, and he because apparently the users in our program, the program participants in our premium selling program, up on Host Hotels, and they started rolling with it. And by the time we had our Thursday members only program participants only workshop where we get together and we create trade plans, Host Hotels came up and people had created some sample trade plans, and they've actually been sending them. Part of my program, if anybody's interested in my program, is that people can send me their trade plans for formal trade reviews. And so I've been looking at Host Hotels. One of the things we told Dan last week, Sip, was we wanted him to wait until after earnings. Remember, Host Hotels is a company that is a REIT. So they buy the actual properties and get the properties all ready. And then they let bigger companies like, the Hiltons and the Hyatts of the world use their properties or run their business out of their properties, but they're the actual real estate owners. So earnings came and went, and I wanted to feature this one, not only because it's getting a lot of excitement. We've been running it through our simulator tools. Again, another plug. I'm going to keep plugging my program because we have these tools where you can do simulated back testing and trade analysis and see how trades would have worked out. This particular candidate is working out very well in our simulation tools. So I wanted to feature it again as my pick because it happens that yesterday and today, the symbol is in the center of we think is the sideways channel. We kind of have identified the sideways channel somewhere about $15.75 to about $19. From $15.75 to $19 is our sideways channel that we're going to create a trade zone around by using options. And the best time, folks, the best time to set up and create a plan for trading this is when the sell is trading in the center of the channel. So I'm going to repeat that again. The for whenever, get your plans, get your trade plan in place is whenever the symbol is trading in the center of the channel. We actually do the trading at the reversals, so at the tops and the bottoms. That's when we do the trading, but we do the planning, which includes the risk analysis, when it's in the center of the channel. So I'm telling you, spend the weekend and create yourself a trade plan on Host. I think that the next time it goes ahead and buzzes support down here at $15.75, if you have a good trade plan in place, you've got your risk figured out, you've got your position sizing, you can go forward and get going with either a bull call diagonal debit spread or just a simple covered call, and you'll be on. I mean, look at what Host has done over the last 6 months. You could have 6 months of income just rolling in on Host. So I wanted to make sure all of these people who are tuning into our YouTube show, who have subscribed and hit that notifications button, that you're spending some time figuring out Host this weekend.
Awesome. Well, we love when viewers give us tips so that we can share with the community, because I know all week long you and the Trading Trader community are looking for opportunities and sharing knowledge and providing insights and giving each other the feedback that they need to see these investments through. And that's one of the great advantages of joining a community like Trading Trainer. So
that community has ballooned, by the way, Sip, since we started this show. That community, I think, when we started this show was around 350 participants, and now it's over 500 participants strong. So, I mean, we've got a real kind of like brain trust that whenever the folks who watch our YouTube show send us a pic to analyze, my community attacks it. And if it's really worth, we'll talk about it the whole following week. So thank you, Dan, because we like this one.
All right, host. All right, let's get to this week's speed round. And so these are questions from other viewers throughout the week. And we're going to head on to the East Coast first to start in that New England area, Boston, Massachusetts. This is Frank from Boston. He's interested in Yeti, ticker symbol Yeti, Hety, Yeti.
Yeah, Yeti. I like their cooler. Very good cooler. If you like things like keeping your food. Yeah, okay. Here's what I know about Yeti. First of all, you can see here Yeti is trading in a real nice sideways channel. So this is what you would think at first glance as being a great candidate for selling premium in on, and it is, but you'll also notice that the reversals, if you look at my traditional, I use this fast MACD. This is, I wish I could take credit for it, but this is from the guys over at the MACD, the father and son team, the Appels, that came up with the MACD and then came up with variations of it. So if you want more information on the MACD and all the different variations, I mean, I don't get anything from those guys, but you can go check them out. Marvin is the son. So the scoop is this is not going to give you nice signals with the fast MACD. You're going to have to figure out a different way. And I've been using quantitative analysis, which means I'm using NASDAQ level 4 data, and I'm actually having it trigger me, based on where limit orders are being placed. That's how I'm knowing when the reversals have been hit. So you're going to have to be a little bit more of an elegant, almost getting into the realm of being a trader versus an investor in order to sell premium on this, because you can see by the time we get our fast MACD signal, the underlying symbol has already crossed the channel. Our whole idea behind making money on selling premium is that we get our signals to do half of the trade or leg into half of the trade on one half of the channel, and then get our signals to leg in on the other half of the channel. So it's all about signals on Yeti. But with that said, Frank, it looks like we're coming down to the bottom. I think I'd let earnings come and go. If you're not already in Yeti, this would be a great time once earnings passed and we know about any sort of craziness that might happen thanks to the earnings. Once that's passed and the calm has come back, I wouldn't be surprised if we could either do a covered call, which means buying some stock, or doing the bull call diagonal, which means buying a deep in the money, far out in time call option, and then just being patient so we can leg into the other half of the equation the next time a top reversal is found. So I like it, but in advance that you're going to need to be a little bit more elegant with your signals. You're not going to be able to use just the off-the-shelf signals.
All right, Yeti, Frank, Boston, Massachusetts. Moving on back to the West Coast, down to Green Valley, Arizona, and this is Hayes. He's interested in a classic name, Bristol Myers Squibb, ticker symbol BMY. AJ, what are you seeing in Bristol Myers Squibb?
This is a classic. This is I think this is Jim Cramer's favorite stock because it's a company that booyah, right? All the buttons and stuff. God, sometimes that drives me crazy. This is a company that's well run, right? And they produce great earnings. They give out great dividends. They're pretty freaking boring of a company, but they just know how to run a business. With that said, it's a little bit on the expensive side, And this might be a company, because this is one of those companies, if all hell breaks loose and all of, investor money wants to go to some place that is not risky, this is one of those stocks where that money will go to. There's just a few companies out there that are just solid companies that you can put your money in and expect it to grow over time. And so with that said, I would actually recommend adding this to your long-term portfolio. And I wouldn't just add it by going and buying the stock. We never do that, do we? We use options to our benefit. And so the strategy I would recommend here is that we use cash secured puts, otherwise known as naked puts. It's where you come in and you say, hey, I'm willing to pay $70 to buy Bristol Myers Squibb, but I won't pay a penny more. Now, you could put a limit order in at $70 and just see if it gets filled or not. And if it doesn't get filled, no harm nor foul. But wouldn't you rather get paid to put this order in? And if it goes in, it does. If it doesn't, that's great. Instead of just doing a limit buy order. So what you can do is you can have that $70 ready, and then we can sell a $70 put. So if I come over here to our option chain, and I take a look at the most recent expiration. Well, we have the expiration today, but I'm going to go out to the next monthly, which is March 17th. The $70 put right this minute is trading at 95 cents a share. So I can actually sell that thing for 95 cents a share. Remember, options are sold in lots of 100. Sell that thing for $95. And what it basically says is, if somebody wants to give me that stock for $70 a share, they can. Otherwise, by March 17th, it'll expire worthless, and I get to keep the $95. In fact, I get to keep the $95 per contract no matter what. So I get paid and like an income or a finder's fee, and then I'm locking in the purchase of that stock at $70 or whatever. If I only want to pay $67.50, they'll give me $42 per contract, and then I just wait, and somebody will sell it to me for $67.50, or they won't. But that's the price I'm locking in. I'm creating the exact certainty of what I'm willing to pay Bristol Myers Squibb at. And in the meantime, I get paid. I go into extreme detail on this in I think it's a 15-minute short course that people can get if they go and get free access to our web portal. Can you throw the URL into the chat?
Just threw that in there, and on the screen now is just the page that you'll get to. But when you sign up here, like AJ said, you're gonna get access to all sorts of stuff.
I put
specifically what
all
he's talking
sorts
about
of
now.
freebies. I put all sorts of freebies into the web portal. You should go get yourself a web portal account here at Trading Trainer. Even if you don't upgrade and become like one of our paid program participants, I think I've put white papers in there. I've put in some spreadsheet tools that help you analyze options. I put a couple of short courses. That short course that I did with the gentleman who talks about tax advantages for traders in 2022, 2023 is in there. So just follow that link that Sip just put into the chat area. And there's a short video on how to make sure you get a good account. I'm always about tutorial videos. So I put a video there so you know what to fill out to get yourself a free access into our web portal. You guys should just grab that information. Just grab my stash.
Yeah, so the link is in there, and there's so much information over the last 20 years that you could spend all weekend. But it's all the good juicy stuff that we try and give you little glimpses of on the show. But if you really want to dig down deeper, head on over there, and you're definitely going to get a lot of good stuff to help you understand these strategies, investing, and just other things to help you succeed as an investor. So back to the speed round. Moving on to Sin City. This is Anastasia in Las Vegas, Nevada, and she's interested in a name I'm not too familiar with. Maybe you are. Conur Mining, ticker symbol CDE.
Yeah. Not sure what type of mining they actually do. I don't think it's Connor. I think it's Coeur. I think it's a French
Oh,
Coeur
I misspoke.
mining.
Yeah. Coeur. Coeur Mining.
Mm-hmm. Okay. So I'm looking over here at this. Let me see just really quick. Other screen. CDE. See what kind of mining they're into. Operates primary silver and gold and precious metal mines in the Americas. Silver gold mine in Mexico. They've got a silver mine in Bolivia. They've got a gold silver mine in Nevada. That might explain why Anastasia is interested in this symbol. With that said, again, they're coming up with their earnings announcement is be on February 22nd, so not that far. I'd probably wait to see how investors react to earnings before I do any sort of strategy here. But you know what? This looks like a nice sideways channeling symbol. Now, I don't have any experience trading this, but based on the pattern alone, if I wind up finding a level of support here, this might be a great opportunity to do some covered call writing. I'm not sure if they have back month options. Let's take a look. This is a very inexpensive stock, which is great for people who are just dabbling, meaning you've only got $400, $500, maybe $1,000 in your portfolio. And I do see, just looking at the March option, this would be the option that we sell premium on, both the put and the call side, has activity. The bid-ask spread is not so bad. They're trading every dollar. So that means that if we were to be setting up our trade zone, we could use 4 and we could use 3. We could get by with doing a trade with setting up a trade zone between 3 and 4. So I think that there's actually some possibilities here. Let me see. Protective option. There's activity on the protective option side. And it does look like if you really wanted to, you could get into some substitute options, but it's so inexpensive. Maybe we're just thinking a nice covered call writing strategy. Now, me personally, since it's new to me, I would probably spend a month or two paper trading this as a premium just to see how the stock responds, right? That's one of the beautiful parts about investing in the markets is you can actually trial run your trade through paper trading and see how it turns out before you actually get in there with your real dollars. And so whenever I have a new underlying symbol I don't know anything about, paper trading might be the way to go at first. But if you have some experience with this trading this underlying symbol, and that's different than experience with the actual company, right? You may work for the company or you may know of the company because they've got activities near where you live, but that doesn't mean you know about trading it. So take a moment, paper trade it, but it looks like the pattern is materializing well. If you've got your channel set up between about $3.20 and $4.20, that means you're thinking, what, $3.70 would be your middle line. So you could go back and create your risk modeling from around February 7th, February 8th, get a good trade plan in place and be ready to go.
Awesome. So that's Anastasia with Coeur Mining. I hope I'm saying that right. A lot of vowels there in the middle.
Yeah. Romance language.
But it is, like you said, there are some options. It is a cheaper stock. So maybe this one is a name that the Trading Trainer crew will, find interesting as well.
Yeah. What's really great about being part of our program is that you do have like this huge hive mind where they'll listen and they'll find a symbol like this that somebody, average person off the street hands us, and they'll go to town and each one of them like dissects it in a different way. And then they get together and collaborate on the answers and pass it by, me and my traders who are running the program, like Coach Jay. We had him on the show a couple of episodes ago, a few more than a couple episodes ago, and we overlook what's going on, and it just comes back so formed with such a trade plan on what to do that we can then all follow it, and it becomes awesome.
Yeah, so the links to accessing a lot of that stuff is in the chat. I did have one ticker that I was looking at that I'd love your feedback on. That's
Yeah.
been in the news, and that's DraftKings, ticker symbol DKNG. I think they're up like 20%. I think they're gapping up, and very interesting business model. I feel like they've been getting hampered, the last few years. But is there an option? I mean, it's not a boring name. That's why I'm interested in. Yeah.
Okay, so earnings was released. Obviously, investors liked what was happening at earnings. If we would have known about this, I bet you this is one of those companies, Sip, that ahead of earnings, would have been an increase in uncertainty and excitement, which would make the options high, and we could have done one of those overnight trades for earnings. But in the meantime, let's see. Let's look at the option chain. Oh gosh, very popular stock, isn't it? Trading at the traditional value. So instead of trading every dollar, they're trading every $2.50 up to the 25. So if I show the increments, we're talking here, we're talking here. So based on how it's moving, that's not a problem. Usually we like to see, use those ones that are trading every dollar. But yeah,
Well,
I'm not sure.
Yeah,
go ahead.
I was just gonna say it's just in the news, and it's like it's gonna be getting that media chatter, and this might be a good example of this is something we stay away from because it doesn't check a lot of the boxes that you like to implement your strategies with.
Maybe. It may not be I was going to say that it may not be a premium selling candidate, but it may be a candidate that we can trade as a swing trade if we have kind of an insight onto the directions. I'd like to see how it plays out after investors digest this most recent earnings. I'd like to get it like another week or so in there, and then I might want to look at it with some traditional like swing trading templates. So yeah, I'd still have this one just as my like interest, and I wouldn't put. I'd be playing with this one, Sip. I wouldn't be putting like my big portfolio. My big portfolio is all invested in like our secure premium selling positions. This would be more of like, hey, let's take a couple of $1,000s and let's have some fun.
Yeah, and I wonder how much of that uptick was the Super Bowl, right? Because the Super Bowl was last week. I doubt that they could filter that into today's earnings by then, but hey, who knows? Who's running the books? Did you get a chance to watch the Super Bowl?
You mean AJ Brown?
I'm just the greatest sporting event in the world.
Absolutely. Absolutely. It's funny because I did a good Samaritan thing and I rescued like a kitty cat like 2 or 3 days before the Super Bowl, and the kitty cat attacked me, which means I had to be put onto antibiotics. And so I went to a Super Bowl party and I didn't get to participate in the drinking games. And I was bummed because, you're the only dude there who's like drinking water or fizzy water, and everybody else is like having fun. Like every time there's a sack, they're drinking a beer and I'm having to drink fizzy water. So it wasn't as fun for me, but it was cool watching AJ Brown kick ass.
He did score a touchdown. I was excited. I was like, "Oh, if he catches another one, he could be Super Bowl MVP."
I know, and I'm like thinking to myself, man, oh man, I'm gonna start stealing his name and stealing some of his cred.
Well, look, he's got quite the vacation now, so we're not going to be hearing about that other AJ Brown till next season, and we're going to be focusing solely on you, training trainer, helping our community learn how to invest, how to utilize their portfolio, how to take advantage when markets fall, those things. So throughout the show, we've been throwing the links into the chat. Head on over there. AJ's got a special event on Tuesday. You've got access to the free workshop. And then we did miss one thing that I do want to pull up real quick, and that's AJ's one-on-one training program, right? So if you're looking for a little bit more hands-on work, head on over to the link that I'm going to throw in the chat right now, AJ's one-on-one program, and you'll get the extra attention that you need if you are looking to work directly with AJ, with one of AJ's top advisors. The link is going into the chat right now. And I think you've opened up a few slots for the coming spring, or are we still maxed out there, AJ?
We were maxed out, and then somebody's going to benefit off of this. One of our program participants has come down with long COVID, and so he's taking a 3-week break in order to recover from his long COVID or get farther along. So we actually have a gap. So if anybody is interested in getting going with their one-on-one mentoring and wants to start as early as next week, we have one place open. Otherwise, you get put into kind of a queue. And I guess we're starting now mid-March. So we've got room. We've got room. But if you want to get in and get going right now and start selling some premium right away with us, then we've got an opening.
All right. Otherwise, just sign up, get the info, get the scoop, learn a little bit more of what it's going to look like. Maybe work it into your schedule, and we'll approach and helping you become a better investor in a one-on-one capacity. We've got the group stuff, we've got the webinar, we've got AJ's workshop. A lot of ways to continue to advance your education. Also, at any given time, feel free to throw a question into the DMs, and someone will get back to you as soon as they can. All right, AJ, options expiration, middle of February. What should all of us be looking forward to the next couple of days next week?
I think we should all be doing some planning. Find other candidates. Start with Host, the one that I featured, and just get planning so that we can make March as profitable as February has turned out to be.
All right. And if you've enjoyed the broadcast and you want to tune in to the live shows, some replays, some AJ's clips, head on over to the YouTube page, hit that subscribe button, hit that like, hit that follow. We're also streaming on Twitter and Facebook, and we're always just trying to get you the best quality content that we can. AJ, any final words?
I like this side by side because now you're over here instead of over here. So I like this new thing.
We're making moves. We're trying to advance. The people have spoken. We've got a little audience base that's growing. So we appreciate it. We appreciate everybody tuning in. AJ, I appreciate your time today. I hope everybody has a wonderful options expiration Friday, and we'll catch everybody next week.
Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.